Title: The Billion-Dollar Ghost: How Wirecard Fooled the World. Description: in June 2020, a German fintech darling worth $19 billion market cap vanished in a single day. This is the story of Wirecard, a company that wasn't just cooking the books, it was inventing an entire empire out of thin air. From secret offshore accounts to a phantom office in the Philippines, discover how one of Europe's most celebrated tech unicorns turned out to be the biggest accounting fraud in German history. Tags: corporate crimes, Wirecard fraud, white-collar crime, financial scandal. Script: on the morning of June 18, 2020, the air in Munich's financial district was thick with tension. Inside a nondescript office building, police officers were executing a raid that would unravel one of the most audacious frauds in corporate history. The CEO of Wirecard, a man who had been celebrated as a tech visionary, was being led away in handcuffs. But here's the thing that still keeps regulators up at night. For over a decade, this wasn't just a story about a single rogue executive. It was a story about how an entire company, worth nearly $19 billion at its peak, was built on a foundation of nothing but smoke, mirrors, and a secret that wasn't just hidden in accounting ledgers, but buried in the jungles of the Philippines. Welcome back to Corporate Crimes. Today, we're diving into the Wirecard scandal, a case so brazen, so absurdly simple in its deception, that it makes the Enron scandal look like a minor accounting error. Wirecard was supposed to be the future of digital payments. It was Germany's answer to PayPal, a fintech darling that processed transactions for everyone, from airlines to adult websites. But instead of revolutionizing finance, wasn't their only talent. Wirecard was also, it turns out, exceptionally good at creating money from nothing. By 2018, Wirecard had replaced Commerzbanker's most prestigious stock index. But the problem was, the money that should have been sitting in bank accounts in Asia wasn't there. It had vanished into a labyrinth of shell companies, fake contracts, and a secret that was hidden in plain sight. So, how did they pull it off? And why did it take so long for the world to notice? Let's go back to the beginning. Wirecard started in 1999 as a small processor for adult websites and online gambling. For years, it was a minor player, nothing special. But in the early 2010s, something changed. The company's revenue started skyrocketing. Quarter after quarter, they reported explosive growth, especially from a mysterious new division they called third-party acquirer business, basically payments processed through partners in Asia. The company's stock chart looked like a ski slope, straight up. By 2018, Wirecard was worth more than Commerzbank, one of Germany's oldest financial institutions. But here's where the story gets strange. The profits were coming from a region that was notoriously difficult to audit. Wirecard claimed to have massive operations in Singapore, the Philippines, and India. They said they were processing billions of dollars through local partner banks. But when journalists and analysts started asking for proof, they hit a wall. Wirecard's management would say the contracts were confidential, the partners were unnamed, the bank accounts were in foreign jurisdictions, and the auditors, a small firm called EY, kept signing off on the numbers. It was a perfect storm of complexity, opacity, and blind faith. But every house of cards has a weak point. For Wirecard, that weak point was a man named Jan Marsalek. Jan Marsalek was Wirecard's chief operating officer. He was a mysterious figure who rarely gave interviews. He was the architect of the Asian expansion. He was also, as it turned out, the master of the fake transaction. The scheme was simple, elegant, and devastating. Wirecard would sign contracts with third-party partners, companies that were often shell entities controlled by Marsalek himself. These partners would supposedly process payments on Wirecard's behalf. Wirecard would then record the revenue from these phantom transactions as if they were real. The cash, of course, never actually existed. It was just a line item in a spreadsheet. To cover their tracks, Wirecard opened bank accounts in Singapore and the Philippines. They deposited small amounts of real cash from legitimate business to make it look like real accounts. But when auditors came knocking, the money had conveniently been moved. The real genius and the real audacity was that Wirecard didn't just fake their revenue, they faked their entire existence. In 2019, a whistleblower leaked documents showing that Wirecard's Philippine operations were essentially a mirage. The company claimed to have a major office in Manila, with hundreds of employees processing billions in payments. investigators went to the address. It was a laundromat. The entire Philippine business, which accounted for a huge chunk of Wirecard's reported revenue, was a ghost. By this point, you might be wondering, where were the watchdogs? Where were the regulators? The answer is both simple and infuriating. Germany's financial regulator, BaFin, had received warnings about Wirecard for years. Journalists at the Financial Times had been publishing investigative reports detailing the red flags, the missing auditors, the suspicious partners, the unexplained cash movements. But instead of investigating, BaFin did something shocking. They launched a criminal investigation into the journalists. They accused them. BaFin accused the Financial Times of market manipulation, siding with Wirecard's claims that the reports were part of a short seller conspiracy. The German government, desperate to protect a national champion, turned a blind eye. Even the Chancellor, Angela Merkel, personally vouched for Wirecard during a state visit to China. But the most damning failure was the auditor. Ernst & Young, one of the Big Four accounting firms, had signed off on Wirecard's books for over a decade. They had access to the bank accounts. They had access to the contracts, but they never verified that the cash was actually there. How is that possible? Well, it turns out that Wirecard's external auditors in Singapore were simply shown screenshots of bank balances, not the actual accounts, and EY, in a catastrophic lapse of professional skepticism, accepted them. One EY partner later admitted under oath that they had never even called the banks to confirm the balances. The trust was so blind, so deep, that a $19 billion company was being audited based on PDFs. And then, in June 2020, the house of cards finally collapsed. The trigger was a routine audit report. KPMG, hired by Wirecard's own board to investigate the allegations, released a bombshell report. They found that 1.9 billion euros, nearly a quarter of Wirecard's entire reported cash, could not be verified. The money was supposed to be sitting in escrow accounts in the Philippines, but when KPMG asked for the bank statements, the Philippine Central Bank said those accounts didn't exist. The trustee for the accounts turned out to be a law firm with no real office. The entire thing was a fabrication. The stock plunged. Within days, Wirecard filed for insolvency. The CEO, Marcus Braun, was arrested. Jan Marsalek, the COO, disappeared. He is still on the run today, believed to be hiding in Russia. The 1.9 billion euros was never recovered. It wasn't stolen. It was never really there. It was a number on a screen, a ghost in the machine. So, what do we learn from this? That's where we end. The Wirecard scandal is not just a story about a single company. It's a story about the failure of the entire system designed to protect investors. It's a reminder that when the incentives are aligned for everyone to believe the lie, when regulators want a success story, when auditors want to keep their fees, when politicians want to show off a national champion, the truth can be buried under billions of dollars of fake revenue. Wirecard's executives are now facing trial, but the damage is done. Thousands of investors lost their life savings, employees lost their jobs, and the reputation of Germany's financial system was shattered. But there's a deeper lesson here. The next Wirecard isn't waiting to be found. It's probably already listed on a stock exchange near you, with glowing analyst reports and a CEO who smiles for the cameras. The question is, who will have the courage to look beyond the PDFs? Who will ask the uncomfortable questions? Because in the world of white-collar crime, the biggest frauds aren't the ones that are cleverly hidden. They're the ones that everyone wants to believe. If you enjoyed this deep dive into one of the most audacious corporate crimes of the 21st century, make sure to hit that subscribe button. We'll be back with more stories of greed, deception, and the people who thought they could get away with it. Subscribe for more